In this lesson video, we will learn about balance sheet and its preparation, its components, format for a sole trader or a partnership. It is a statement of financial position. It shows the assets and liabilities of a business as on a particular date, maybe end of the year or half year or quarterly time period. So here assets are listed in the order of liquidity. Liquidity means easily convertible into cash. So cash in hand and cash at bank are already liquid, and bills receivable, debtors are generally convertible into cash within an operating cycle of 1 year. Investments, depending upon the nature of investment, if it is equity investment, anytime you can come out of the market. If investments are made in equity shares or marketable securities, can be easily convertible into cash. If it is of long-term deposits or long-term investments, it is less liquid in that case. Stock generally only when you sell the goods, you will realize cash. So it is unknown. As of now, it is less liquid comparing with other current assets like cash in hand, cash at bank, and all these assets. It is less liquid. Prepaid expenses has already been paid. Insurance premium or rent may be paid in advance. It is an asset for the future period. The payment is made in advance. Whereas assets like furniture, plant and machinery, land and building, business premises, all these are fixed in nature. There is no question of liquidity here. These are all assets meant for earning over a period of time or to generate income over a period of time. Whereas patent and trademarks are your intellectual property rights that you have registered. So long-term asset. Similarly, goodwill may be a business bought on loss. It is a capital loss. It can be written off, and it can be written off by charging against your profits over a period of time. It can be wiped out or written off over a period of time. It can be amortized over a period of time. In case of liabilities, all these liabilities are listed on the basis of urgency. So creditors, bills payable, bank overdraft are to be generally paid within an operating cycle of 1 year generally, including outstanding expenses. Mortgage loans, again based on the duration. If the duration is for 3 years or 5 years, within that period the loan got to be settled. Reserve fund is a transfer allocation. And the next part is important, is capital. I will tell you what has happened to the capital, how much the capital has grown because of your net profit. If it is profit, it should be added with capital. Supposing the owner of the business withdrew cash against cash from business for personal use, called drawings, this will reduce your capital. And after subtracting the income tax, the closing capital is calculated. In case of partnership firm, it will be capital of partners. In case of sole trader concern, it is capital of the sole trader. If assets and liabilities are listed on the basis of performance, a reverse effect should be given. There, the fixed assets will appear first, followed by current assets. Current assets include cash in hand, cash at bank, bills receivable, debtors. If it is marketable securities, it is also part of current asset. Stock, all these are current assets. But cash and bank are liquid assets. Similarly, here creditors, bills payable, bank OD, outstanding expenses are current liabilities. So in fact, the operating efficiency of a business is how quickly you recover your dues from your debtors and against bills, and how much amount of credit that you enjoy from your creditors and payables and outstandings. That will reflect on your profit. Okay, the more the profit, higher will be the capital. So the profit is something calculated based on the profit and loss account, where the expenses are adjusted with the revenue and the net effect is added with capital. These are the contents of balance sheet. We will now look at the way by which final accounts are prepared when adjustments are given and when adjustments are not there. Certain items may be identified after the finalization of accounts. So in that case, how it should be recorded, given effect in books. If only ledger balances are given, how it should be used to prepare final accounts to generate the results of the business and to show the financial position of a business is the next part what we are going to deal with.